In this video, we're going to look at the cash book. Now, the cash book is a book of prime entry, so it's the first place that certain types of transactions are recorded. And what it records is a business's receipts and payments from its current bank account. And if the business also deals in cash, so has receipts and payments in cash, the cash book will also record these. So what does a cash book look like? Well, there are a number of different ways that the cash book can be presented, but typically we would see the following. We'd have the receipts on the left-hand side of the book. And in here we would record all of the receipts. So the date, a description and reference for the receipt, as well as the amount that was received. And we'd also record whether it came in as cash and went into the money either in the tills or in the safe, or whether it was paid into the bank account. And then we would have an analysis of what the receipt was for, so the source of the receipt. On the right-hand side of the page, of the cash book, we'd have the payments. And again, the information that we'd record is the same as for receipts. So we'd have the date, description and reference. We'd have where the money was paid from, so whether it came out of our stock of cash or whether it was a payment from the bank account. And we'd analyse what that payment was for. Where is it going? Now, some businesses do split the cash book into two separate books, in which case we'd have the cash book receipts book and the cash book payments book. So let's have a look at the cash book receipts side of the cash book. So up on the screen, I've got a basic layout. We've got date, details, or a column for reference. Then the first two columns record where the money was paid into. So did it go into the tills or the safe, or was it paid into the bank? Then the remaining columns, VAT, cash sales, sales ledger, and bank interest, record the source of the funds that have been received. So our first two columns, cash and bank, will record where the money has gone, and the remaining columns where the money has come from. So let's have a look at how we would record a cash sale. Just to remind you, this term cash sale doesn't mean that the receipt was in banknotes and coins. Here we are using that term simply to mean that payment was received at the same time as the sale. So there was no period of credit given. So how do we record it? Well, we'll record the date. In details, we might have cash sales or a similar type of description. The reference could be a till roll reference, and then we would record the actual amount of money received. So in this case, £621.23, and here it's all in cash. Then we will analyse the amount that's been received between VAT and the net amount will go into the cash sales column. Having looked at how we record a cash sale, we'll now look at how we record a receipt from a debtor. Alternative name for a debtor is a trade receivable. So it's somebody who owes us money for sales that have been made sometime before. So a period of credit has been given. Well, here what we do is we record the date, we'll record who the money has been received from. The reference, here I've used the reference for Jenkins sales account. We'll record the money that's been paid into the business. Here it's gone straight into the bank, and the total amount will also be recorded in the sales ledger. Please note that we don't split out the VAT or anything like that, simply because the VAT has already been accounted for on this amount in the sales day book. So there's no need to do it again, otherwise we'd end up double counting VAT. So let's now record a couple of additional sales. So here we've got another cash sale, but with this one on the 14th of the 3rd, we've received both money into our cash account and into our bank account. But the process is exactly the same. We still split out the VAT from the sales and put the net sales figure into the cash sales column. And again, on the 16th of March, we've got another receipt from a trade receivable or trade debtor. So the gross amount will be paid into the sales ledger. Now that we've looked at sales receipts, either cash or credit, we'll look at other types of receipts. And where a business receives money from another source, we'll simply add on additional columns as required. So for instance, if we've received some bank interest, then we'll record a bank interest column. So the gross amount will go into our bank account on the left hand side of the screen there, and the gross amount received will go into the bank interest column. Then at the end of a period, we're going to add up the total of all of our columns. So this will then be used for transferring the information into our general ledger, and it can also be used as a check to make sure that we haven't made any silly little errors. The way that we can check is we would add up the totals of our cash and bank columns, and that should come to the same amount as the columns where we've analysed the source of those receipts. And up on the screen we can see that yes, these columns do cross out, so it gives us a little bit of assurance that we haven't made any silly mistakes. Okay, now that we've completed and added up our cash book, we're going to post all of the information to our general ledger. And if we look at the different columns, the total of the cash column will be debited to the cash account. The total of the bank column will be debited to the bank account. This is because both of those record increases in assets, being the amount of cash we have and the balance in our bank account. Then all of the analysis columns will be credits. So we'll credit the VAT account, as that represents an increase in the liability payable to HMRC. We'll credit the sales account for cash sales. We'll credit the sales ledger control account with the total in our sales ledger, as this represents a reduction in the value of an asset, being the amount of money owed to the business by its customers. And lastly, we'll credit the bank interest receivable account with the amount of interest that's been received. So to summarise our postings to the general ledger, here I've got the cash and bank accounts where we'll debit the totals in our cash book to those two accounts in the general ledger, and the analysis of the receipts, all of those columns will be credited to their respective account in the general ledger. Again, do note that the total of your debits should equal the total of your credits. In addition to posting information to our general ledger, we will also post information to the sales ledger. Specifically, we will post any entries made into the sales ledger column of the cash book. And for each receipt there, we will credit the relevant customer's account in the sales ledger. So here is the postings to our sales ledger. We will credit both the Jenkins and Curlew accounts with the amounts that have been received from those customers. Please note that there isn't a corresponding debit, because remember, the sales ledger simply looks at the sales ledger control account in the general ledger and breaks it down between different customer accounts. Now that we've had a look at our cash book receipts, we'll turn our attention to the cash book payment side of the cash book. So up on the screen, I've got a basic layout, and we can see that it's very similar to the cash book receipts side. I've got date, details, reference, then a couple of columns to record where the payment is coming from. Is it coming from our stock of cash, or is it coming out of our bank account? And then we have a number of further columns where we will record where the money has gone. So let's go through how we would record a number of different transactions. So we'll start off with cash purchases. Again, cash purchase, well, this simply refers to the fact that payment was made at the same time as the purchase. It doesn't necessarily mean that payment was made in terms of notes and coins. So we would record the date and details, the reference, could be an invoice reference. We'll record where the money has come out or has been paid from. So in this case, it's been paid in cash, and then we will analyze that payment between between the VAT, and the net amount will go into the cash purchases column. Let's now have a look at how we would record a payment to a creditor. Well, here, a creditor, another name for this, is a trade payable. It's someone that we have taken credit from, a period of credit, and we pay sometime after the invoice was raised. So we'll record the date, the details. We can record the name of the supplier or trade payable or creditor. We'll record the reference. So the reference there is the purchase ledger reference. We'll record where the money has been paid from, in this case the bank account, and we'll record the total amount in the purchase ledger. Again, like a receipt from a credit customer, a payment to a credit supplier, we don't split out the VAT in our cash book because that has already been done when we recorded the invoice in the purchase day book. We can also have other types of payments, and other columns would be added to make sure that we could record all of these different types of payment in the cash book. So up on screen, I've got a bank charge. So we'll record the date, the bank in details. I'll record bank charges in the reference. I might put the number of the bank statement on which the bank charges were recorded. I'll record the total amount coming out of our bank account, and the total amount will also be recorded in the bank charges account. Each period we will total up all of the columns, and the total of our cash and bank columns should equal to the total of all of the other columns, the VAT, cash purchases, purchase ledger and bank charges column. So we can do a cross-add check on the payment side of the cash book as well. So up on the screen, I've got the postings list to our general ledger. So this time the debits and credits are swapped round from the receipts. So here we will credit the cash and bank account with the totals from their respective columns, and we will debit the accounts analysing those payments to their respective accounts. So we'll debit VAT, purchases, purchase ledger control and bank charges. The total of our debits should equal the total of our credits. And in addition to posting information to the general ledger, we'll also need to post to our purchase ledger as well. So every entry recorded in that purchase ledger column in the cash book is going to be debited to the relevant supplier's account in the purchase ledger. So here we simply had one payment to a credit supplier, a payment to Pure Rose. So that £960.85 will be debited to their account in our purchase ledger. As was the case with the sales ledger, please note that there isn't a corresponding credit to that debit, simply because the purchase ledger only provides an analysis of the purchase ledger control column in our general ledger. It doesn't do anything more than that.